welcome to The Trade. Well, before we get to the charts that matter, let's have a look at what we've seen in global markets. With the election of Trump continuing to buoy global equity markets, stocks on Wall Street extending their recent records, also following the Fed's widely expected decision to cut its funding rate by 0.25 percentage point. Here's Fed Chair Jay Powell.
We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%.
Jay Powell was also asked whether or not he's worried that he might lose his job under President Trump.
In the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume.
We don't guess, we don't speculate, we don't assume. All right, let's get into the charts that matter, and particularly looking at currencies. What a week, Nick Twidale from ATFX. Good to see you.
Thanks for having me. Yeah,
yes.
It's been a quiet one, isn't it?
Just a very quiet week. Well, let's talk about the Aussie dollar, because we also had the RBA, we can't forget. It feels like a month ago now, but it was only a couple of days ago.
It does, yeah, and RBA was a little bit of a fizzer for us, really, wasn't it? Because we knew we had the election. It was on the election day, really, wasn't it?
Yeah.
And then we had the Fed coming up. So the poor old Aussie got a little bit sort of neglected, I think. But I'm quite surprised with the move that we've seen overnight, to be honest with you. I thought we saw the right move after the election result with that resounding victory for Trump. I think it is going to be US dollar positive moving forward into the medium term and even the short term. But a massive correction and rally that we've seen back for the Aussie, sitting just beneath 68 cents now. So I think
so that likelihood of 70 sort of seems to be pushed out, right?
I think so, yeah. I think you'll start to see some sellers coming back into the market now. To me, the Aussie could be one of the vulnerable currencies moving forward, especially if we do see Trump come through with those high tariffs on China in particular. We trade Aussie as a proxy of the Chinese economy, and if you're going to see dollar growth as well. So I think the Aussie could be ones that not you only look to sell against the dollar, but also on the crosses.
All right, well, of course, a lot of volatility in the yuan as well. Let's have a look at what we saw from the euro, because that actually rose against the greenback overnight.
It did, yeah, and a similar surprise to me was the euro, I think, got hit, and maybe it was just an overextended move on the excitement from the US election. We have seen the Fed come in with their 25 basis points. It was fully priced in, which is why I think I'm surprised to see such a dramatic and almost sort of stratospheric move back up in the euro. To me, I thought we'd get those bounces, but I thought we'd kind of like more the old dead cat bounces, and then it goes again. But I think there's just a lot of uncertainty still in the market, even though we've got Trump in control of the government after Christmas. Let's be honest. Fed, I thought, good caveat on the short term, because I think over the longer term they are going to be influenced by what policies come in, and I think they are going to be inflationary, which is why my stronger dollar view comes in. So the euro back into mid ranges, really, like that resistance I expect to hold around 109, and then I think traders will be looking. We've got that 200-day moving average coming in, so they will be looking to sell these kind of rallies, then up to 109, and I'll be looking for a break of 107. I have been wrong. I was wrong overnight. Things could change, and even with Trump, we know he can change his mind very quickly. So that will see volatility. I think the guarantee we're going to get is more volatility in the days, weeks, months
Yeah, I
ahead.
think the best comment I heard this week was the only clear winner really is volatility. Although, of course, now we know there is a clear presidential election winner too. But when it comes to what we've been seeing as well with the pound, I mean, the euro probably more subject to whether or not there's going to be a trade war or higher tariffs on the Eurozone. What does a Trump 2.0 presidency mean for sterling?
I think you've sort of nailed it on the head. So I'd probably be looking at sterling against the euro in particular. I think it's more negative for the euro than it is for the pound. But I think for cable, I think we'll probably see more downside in line with my stronger dollar view. We simply don't know. There's not too much. It's more of a services economy, as we know, for the UK and the US. So I don't think we're going to see too much of an impact. And that's why I'd probably be looking to buy sterling on the crosses as maybe one of the favoured majors against the other majors and certainly some of the emerging market currencies. So I think sterling's going to actually fare relatively well on the basket, but not necessarily against the dollar.
It's hard to believe it was only a week ago too that we had an election in Japan
Yes.
and the BOJ decision too. The yen firming a little bit, 154.28 yen to the dollar.
Yeah, so I mean, once again, volatility in the dollar yen's been horrendous, hasn't it? So I don't think the BOJ are going to be too happy if we see a further extension to the top side. And once again, this kind of goes in line with my strong dollar view. And also, I think probably medium term, there's a big debate on how much the Japanese market's going to be affected by probably a downturn in global growth and also just being in the Far East. So we know Trump's going to go after China, and that's going to have a knock-on effect to the whole Asia-Pac region. How much will it affect yen? I'm not entirely sure. I'm kind of leaning that maybe you look at things like the yen-China cross, and in times like this we do start looking at the crosses to take the dollar out of the equation. But I think dollar yen for the moment, I'm probably a buy on dip still, and then we see where we go and what updates we get out of Japan. But really, that dollar side of the equation is going to dominate dollar yen for the next foreseeable, really.
All right, Nick, always great to have you on. Thank you so much.
Thank
Nick
you.
Twidale from ATFX.